Are your hard-earned savings being raided without you even knowing it? Uncover Wall Street's next big play and protect your future. In today's episode, we delve deep into the financial landscape that has everyone buzzing, from Wall Street to the world of Hollywood. First, let's talk about the biggest mover in the stock market, the Dow Jones Industrial Average. Dow surges 1,200 points after Fed minutes. It's an eye-catching headline, isn't it? But why did the Dow surge so dramatically? The Federal Open Market Committee released its minutes, revealing a more dovish stance than investors anticipated. The minutes suggest that future interest rate hikes could be more gradual, easing investor anxiety over tightening monetary policy. This news triggered a massive buying spree, propelling the Dow upwards and igniting optimism across the markets. Among the companies benefiting the most is Caterpillar, whose stock soared as investors jumped at the opportunity to buy into cyclical stocks, likely to benefit from a stable interest rate environment. Caterpillar's jump reflects broader confidence in industrial revival and stability in fiscal policy, setting the stage for potential long-term growth. However, amidst the excitement, not all news coming out of Wall Street seems upbeat. The same day, an incisive column titled "Trump's Labor Plan is a Massive 401k Greed Grab for Wall Street" paints a decidedly different picture. This opinion piece from the Washington Post dissects how upcoming labor reforms could funnel even more wealth from Main Street into the hands of Wall Street through 401k accounts. These plans could ultimately handicap everyday Americans' retirement futures, subtly shifting focus from low-cost index funds to financially engineered products, touting higher returns but posing higher risks. With greed and risk juxtaposed, let's pivot to an intriguing shift occurring in the entertainment world. Jeff Shell's departure as president of Paramount marks a significant pivot in Hollywood's operational dynamics. And while this might seem distant from our financial perspectives, remember, shifts in major companies like Paramount influence investor sentiment and subsequent stock valuations. We see industry professionals speculate how this change might signal shifts in streaming strategies and could lead to swings in the parent company's stock. As we wrap our minds around the idea of market instability, what does this mean for technology and innovation's role in financial systems? This is where AI starkly intersects with financial lifestyle trends. The integration of AI into personal finance is no longer a futuristic concept, but a daily financial reality. From AI-driven investment platforms to algorithm-based financial planning tools, the intersection drives more precise and data-driven investment decisions than ever before. With ETFs and indexes now leveraging AI for predictive market analysis, investors are leaning on technology to navigate choppy waters. As this trend continues, traditional sectors like finance face an evolutionary push. Are AI-powered solutions the antidote to Wall Street's greed, offering transparency and mitigating risk? Or are they the Trojan horse leading us further into algorithmic control? A significant cliffhanger lies here. Is the lure of quick gains drawing investors deeper into a tech-driven market trap, or have we finally unlocked the key to balanced, informed investing with AI? Stay tuned as we cover why embracing AI could mean the difference between exponential growth and catastrophic loss. AI's influence extends over to crypto markets, with major coins like Bitcoin and Ethereum seeing incremental gains today. Bitcoin rose by 1.7%, hitting $71,086.99, while Ethereum edged up 0.77%, standing at $2,207.08. The steadiness in the crypto market mirrors confidence stemming from AI's role in crypto price. Back to AI's role in personal finances. Individuals now have access to personalized financial advice, dynamic budgeting applications, and real-time market analytics that were once reserved for high-net-worth investors. These tools not only arm individuals with unprecedented control over personal finances, but also educate newer generations on the nuances of investment and savings. They're empowering users to strategically allocate assets, thwarting the traditional cycle of financial misinformation and mismanagement. Amid these positive strides, the question persists: are AI technologies truly democratizing financial access, or do they present hidden risks, potentially deepening existing financial divides? Which brings us to our pivotal point. How should you strategically position your financial life in this tech-dominant era? For our strong call to action, dive deeper into how you can optimize your portfolio using AI. Consider leveraging AI-powered platforms to gain insights other investors might miss. Understand how these algorithms work, their predictive capabilities, and how they align with your risk tolerance and financial goals. Explore the potential of integrating AI into your investment strategy to not only hedge against Wall Street's potential risks, but capitalize on emerging market opportunities. Drive your portfolio forward with both traditional wisdom and innovative foresight. In conclusion, today's narrative is one of juxtaposed realities. While Wall Street thrives under easing Fed policies, it simultaneously faces criticism for potential overreach into individual financial security. Hollywood's industry shakeups reflect broader corporate maneuverings. Meanwhile, AI's rise stirs both promise and caution, reinventing financial landscapes while posing questions of control and accessibility. Ultimately, by understanding these intersections, you can strategically navigate the evolving financial ecosystem, not just surviving it, but thriving. Remember to like, subscribe, and hit the notification bell to stay informed as we continue to dissect, analyze, and predict the future of finance. Your financial independence and acumen are the goals here at Dr. Fred Markets. Are you prepared for what comes next? Today, let's take a deeper dive into how these elements interplay within the global marketplace. The first thing to consider is how Wall Street's robust growth, fueled by Federal Reserve policies, often seems to diverge from real-world economic conditions. This discrepancy raises important questions about the sustainability of such growth. While low interest rates have catalyzed investment and innovation, they've also contributed to rising wealth inequality, with significant portions of generated wealth accruing to those already deeply vested in the market. Simultaneously, we must focus on the transformative shifts happening within Hollywood. This transformation might seem unrelated to finance at first glance, but when we examine the substantial investments by tech giants like Amazon and Apple into media production, we see a merging of entertainment and technology sectors. These massive financial influxes are reshaping how content is created and consumed, influencing job markets and economic trends globally. AI's emergence stands as both a bridge and a barrier in this evolving landscape. On the one hand, AI unlocks unprecedented potential for efficiency and innovation across sectors. Hedge funds and financial institutions are already leveraging machine learning algorithms to predict market turns with greater accuracy than ever before. However, this power introduces ethical and regulatory challenges. Who controls this technology? How can its benefits be equitably distributed? There is a pressing need for frameworks that ensure AI enhances rather than The complexity of these developments underscores the necessity for a vigilant, informed approach. By staying engaged and knowledgeable, you can position yourself to exploit these evolving opportunities strategically. This channel is your resource, your guide in a rapidly changing environment. So, as you align your investments and strategies with these trends, consider the profound implications they hold for the future and how you can benefit from them. Keep watching, stay connected, and be part of a community that's always a step ahead in the financial journey.